If your business reimburses you or any employee for a business expense, that reimbursement can be completely tax-free, but only if your plan meets 3 IRS requirements, and most small businesses either don't have a plan or they don't know they need one. Let's get into it. An accountable plan is a formal reimbursement arrangement between a business and its employees. When set up correctly, the business deducts the reimbursement and the employee doesn't report it as income. No payroll taxes, no W-2 income. The expense just disappears from the tax picture. The right way. To qualify, 3 things have to be true. First, there has to be a business connection, just like any other deductible business expense. The expense needs to be an actual business purpose, not just a general benefit. Second, the employee has to substantiate it. That means receipts, mileage logs, and a note as to what the business purpose was. Documentation is what makes the whole thing work. Third, if the employee receives more than they actually spent, the excess has to be returned within a reasonable time. You can't pocket the difference and call it a reimbursement. I mean, quite frankly, this all seems pretty obvious, right? If you send your employee to the store to pick up office supplies and they pay for it out of their own pocket, you need to cover that cost for them. If you do it correctly, you get the deduction and the employee doesn't get taxed on it. If you don't have the accountable plan, you don't have the documentation for the expense, in an audit you could be on the hook for giving your employee a bonus rather than a reimbursement. The paperwork is there to make sure it's clear to everyone, including the IRS, that the extra money you gave your employee is a reimbursement, not extra salary. And this applies just as much if you're the owner of an S Corp or C Corp. If you're paying business expenses out of pocket and the corporation reimburses you, the same rules apply. Done right, it's deductible to the business and tax-free to you. The good news is an accountable plan does not need to be complicated. It can be a simple written policy that spells out the 3 requirements, but it does need to exist in writing, and the documentation requirements have to actually be followed. The plan alone isn't enough if the receipts aren't there. And that's an accountable plan, one of those tools that sounds more complicated than it is and saves real money when it's in place. Hit like if this helped and drop a comment with what tax topic you want covered next Tuesday.